The year was 1976. The federal government enacted the 55-mile-per-hour speed limit, and Sylvester Stallone introduced us to a new hero by the name of Rocky. Alaska had recently received and spent a windfall from the $900 million Prudhoe Bay oil lease sale, and as construction on the 800-mile Trans-Alaska oil pipeline neared completion, Alaska's leaders were thinking about how to wisely use the oil revenues soon to come. Led by a group of innovative policymakers, including Representative Hugh Malone and then Governor Jay Hammond, the concept of a permanent fund was developed as a place to invest and capitalize on oil revenues while preserving them for future generations. As America celebrated its bicentennial, Apple Computers was launched, and in Alaska, the people voted to amend the state's constitution and establish the Alaska Permanent Fund. 1 year later, the fund received its first deposit of dedicated oil revenues, while the first oil tanker departed Valdez carrying Alaska North Slope crude. The fund was a new venture in public policy. All of the assets were invested in bonds, which at the time was considered a prudent course of action. Legislators and public leaders began a lengthy debate about the right course for the fund. Ultimately, the legislature determined an investment fund, rather than a development bank, was the preferred choice. The Alaska Constitution separates the fund into two parts, principal and earnings. Mineral royalty deposits flow into the principal, which may not be spent without a vote of the people. The fund's investments produce cash income or realized earnings that go into the earnings reserve. This part of the fund may be spent by the legislature for any purpose, including dividends. 1980 brought many milestones, both nationally and within Alaska. The U.S. men's hockey team accomplished the miracle on ice at the Olympics. Ted Turner launched the first all-news network, CNN. And to allow all Alaskans to more directly benefit from the state's oil wealth, the Permanent Fund Dividend Program was established. At Prudhoe Bay, the 1 billionth barrel of oil entered the pipeline, and in Juneau, the legislature created the Alaska Permanent Fund Corporation to manage the fund's investments. Inflation is like a thief in the night, said the Permanent Fund Board's first chairman, Elmer Rasmussen. And at the urging of the board, the legislature in 1982 enacted inflation proofing, a key component to maintaining the fund's real value over time. Every year, the legislature transfers money from the earnings reserve to the principal to offset the effect of inflation. In 1983, a chorus line became the longest-running show on Broadway, and the Alaska Permanent Fund made its first investments in stocks and real estate. The fund's 10th anniversary in 1987 was a banner year, earning its highest inflation-adjusted rate of return to date at 11.5%. Alaska's savings account did well despite the stock market crash of October 19th, now known as Black Monday. Alaskans watched in awe as the Permanent Fund grew to $10 billion by 1989. And recognizing the importance of the global economy, the legislature granted fund managers the flexibility to invest in non-U.S. stock and bond markets in 1990. The Cold War was ending. McDonald's took Russia by storm, and the fall of the Berlin Wall united East and West Germany. As the world came together, the 8 billionth barrel of oil arrived in Valdez. By 1992, the Permanent Fund reached the $15 billion mark. The mid-1990s brought exciting growth for the fund, with Alaska's money invested in companies located in 33 countries around the globe. In 1998, a new benchmark was established as fund earnings exceeded state revenues for the first time in history, and the fund reached a staggering $25 billion. With the whole world celebrating the new millennium, the Alaska Permanent Fund was poised to enter the 21st century. 2000 saw the fast rise of the dot-com companies come to an end. Share prices plummeted, signaling the start of a 3-year downturn for U.S. and international stock markets. The trustees' policies of investing for the long term and maintaining a diversified portfolio served Alaskans well during the bear market. The bond and real estate portfolios did well, and the fund had smaller losses than many other large institutional funds. The trustees held to this policy, investing $750 million in the stock markets in 2001, positioning the fund to show strong returns after the markets turned around in 2003. The trustees, wanting to further protect Alaska's savings account, increased the fund's diversification once again in 2004. The following year, the fund reached $30 billion for the first time. After 30 years, it's clear that the permanent fund has been a resounding success, taking a portion of Alaska's non-renewable oil resources and creating a renewable source of wealth for Alaska. Alaskans can be proud of the foresight they showed when they voted to create the permanent fund in 1976. Many milestones have been achieved, and the fund has grown in size and complexity. Current and future trustees will continue to look for ways to further diversify the fund and lower risk, while seeking prudent investments that will provide benefits for generations to come.